holding on. Okay, we are at 24,380 thereabouts, if I have it right. So just around at 24,550 actually at the index level at the highest point of the day. Well, it's a good time then to welcome on board Dr. Ashutosh Raghuvanshi. He's the MD and CEO at Fortis HealthCare, joining us on the show. Doctor, hi, good to be speaking with you. I wanted to begin by discussing the occupancy rates with you because, of course, in Q3, due to the festivities and seasonality, we usually see a dip in the occupancy level. Is that something that we should prepare ourselves for in Q3? And what exactly could that number be? What's been the range so far in the 2 months that have gone by?
Thank you for having me. You're right that the third quarter is typically a subdued quarter in terms of occupancy, but we are seeing a relatively healthy trend. And we are seeing occupancy within our system for about 67%, which is not much lower than the previous quarter. So I would say that we should expect very healthy occupancy numbers.
67% thereabouts and healthy occupancy level, not major dip. But what about the RPOBs then? Because a lot of those hospital chains are looking at increasing the RPOBs to kind of get the margin accretiveness out. What's your sense as to how that's trending for you?
See, the RPOBs across the industry have been increasing quite a bit over the last, I would say, about 8-10 quarters. I think there would be some moderation in that. We may see some minor increase. However, it would not be to the same quantum as we have been seeing it in the earlier quarters. But I think this is likely to get moderated as we go forward.
Okay, so that's the take coming in. But when you say moderation in RPOBs, what exactly is the reason for that? And I understand it's moderation and growth and not actual moderation. But is it that it's getting a bit more competitive and the hospitals are finding it difficult to increase price? Or there's no need as such because on the cost side, you're not facing any pressure. Just help me understand why you're okay, moderating your growth levels in RPOB.
No, typically, if you see that the RPOB growth has come from case mix, especially, and also the complex cases being done, surgical cases being done in larger numbers. It has not really come from pricing per se. So the pricing power has been limited for quite some time, and that is not because of the competitive intensity, but more so because of the nature of our business being a little social business. So that part, I think, has been there. And in going forward also, the pricing is not going to increase that dramatically. However, the growth which was coming because of the case mix change is likely to get subdued simply because the number of cases which are coming from the periphery to the larger players, that those numbers are going to get moderated over a period of time.
Dr. Raghuvanshi, I want to talk about diagnostics as well, particularly because your margins and your growth has been pretty good there. And the rebranding exercise, more importantly, of Agilus, clearly now seems to be working for you. How much more do you think it could aid into the revenues and margins in the coming months?
Yes, so we are satisfied with the progress in last quarter. However, there is a long runway to cover. Our growth has been typically lower than the industry peers, so our focus is on improving that. As you might be aware that we are nearly closing the acquisition of 31.5% stake from the 3 PEs, which we expect to complete shortly. We have received all the approvals from CCI, FHL shareholders, and in principle approval from the stock exchanges for the NCD issuance. So that part is taken care of, and now we are focusing on improving the performance. So for that purpose, we believe that we need to get to a growth of about 10% plus, and also the margins to go up to about 25% levels. So that is our objective. We are focusing a lot on specialized tests. Genomics is one of the areas on which we are working quite intensely. For example, 110 myeloid NGS samples we are processing in 5 days, whereas the industry standard is about 15 days. So there have been a lot of progress like that in the diagnostic business, but I think there is still a huge task in front of us to improve the profitability profile as well as the growth rate of the revenue as well.
Interesting. So what I wanted to understand is this stake purchase from the PE investors that you've made in Agilis was expected to be completed by, last month or this month. What's the update there? And also the balance 10.8%, who's that with?
Yeah, so there are multiple shareholders for the minority, but we don't have any commitment or obligation to acquire that. However, this process is almost in its final completion stage. As I said, we have received all the necessary approvals and fundraise, etc., has been in place. So we should close that by end of this month.
Close that by end of this month. But what about the overall consolidation in the sector? I mean, we have seen a lot of PE interest, a big merger happening. There are a lot of news flow around how, that entire consolidation is shaping up in the sector. Are you looking at some inorganic opportunities? Because I do understand you made a small one in Bangalore, etc. But any more on the anvil? And what's the strategy here to increase the bed counts?
Yeah, no, we are certainly always looking for inorganic opportunities as well, but our focus has been on the brownfield expansion. So the brownfield expansion is very much on track. This year, for example, we are creating a capacity of about 700 beds. Out of that, about 350 we will operationalize. In the H1 of the year, we have already commissioned 150 beds out of this. So we are very much on track, and with that, over the next 2 years or so, we would add the entire 2,000 beds which we had said in the brownfield. So that would bring our bed capacity to approximately 6,000 beds. But we are not stopping at that. We did one acquisition in Manesar, which was about a 350-bedded hospital, which we have recently commissioned. It needed to be renovated, and we are in the process of looking at some inorganic opportunities within the clusters in which we operate in Punjab, NCR, and Bangalore and Maharashtra. So these are the clusters in which we are looking for inorganic opportunities. We may soon be able to conclude something meaningful.
That, and we'll converse with you again when you conclude that. But just before I let you go, I wanted a bit of clarity on the latest judgment that's come in from the Delhi High Court regarding the Fortis trademark and in connection with the 3,500 crore arbitral award passed in favor of the Japanese pharma major Daiichi. Any impact on the company's financials, or are you looking at litigating this further? What's the way forward on this?
No, we are not looking at litigating it, because what the judgment, the court order says is that this brand should be auctioned. We would certainly participate in the process, and we expect that if we get it at a reasonable price, we would definitely try to acquire this brand, because this is of value to us. However, if it is not possible, then we will have to see what to do. But we are participating in the court process. We expect this process to be completed within the month of January.
Raghuvanshi, so good to have you on the show. Thanks for taking the time out and speaking with us today. Let's move on and let's address what's happening with PNB Housing, the fact that they're looking to reach that 1 lakh crore rupee AUM mark for retail loans by FY25. My colleague Anjali Palod in conversation with Girish Kurski.
So today, if you look